on Thursday, this is a change of character bar. There is increasing of the volume, but this is not just aggressive supply. Although compared to this low volume, this is not too bad. Look at the spread. If you compare the previous Dow bar, I would say this is a Dow bar, this one, and this one as well, and this one. In terms of the spreads, this is a large bearish bar. If you take into account the top right there from the high to the low is 100 point. This is by far the largest bearish spread that we've ever seen since this year. This uptrend initiated this year has been in this well-defined up channel. Even when we have this change of character bar show up last Thursday, this is still within the up channel. What's more important is what's next. Immediately on Friday, there is a equal volume pop-up with a bullish bar. This acts like a spring or a shakeout type action. The temporary commitment, get back up the next day on Monday, that is the test bar. This sort of the price action suggests that we got an increasing of the wallet, but we haven't seen the bearish commitment, although it broke the first demand zone. Last Tuesday, we talked about this red box, which is the demand zone, about 240 or 45. This is the zone that it tested. So if you look at the hourly chart, we talk about this demand zone initiated right there. When the first tested this zone, it bounced back up. It means that the price respect this zone. It bounced back up, hit the intermediate axis line. This is the axis line, right? That's the rejection. There's a breaking out, but still testing here. And there's a breakdown and tested many times for the level 5300. And after that, show a strong rejection, especially with this aggressive supply coming out. Most importantly, this is still within the up channel. Tested the demand line. This is demand line, demand line, demand line again. We did get a break below of the demand line, below the 5200. We still have the zone below. This is the next axis zone. Until we see that, this is still an uptrend, right? So you can still see a well-defined up channel, high, high, high lows throughout. Based on the price action after this Thursday change of character bar, we should see an attempt to rally up because there is immediate bargain hunter to put right at this demand line. There's a test on Monday. Nothing bearish happening after this Thursday change of character bar. We should see another attempt to rally that could be going all the way to this 5300. We need to see how is it going to react at this level. Another attempt to rally up, test the 5300, or if it could break out, then that will challenge swing high. A pullback means we need to see a break below 5200. 200 is a key level. Once it's break below this up channel, 5120 to 5160 zone could provide some support. Nikkei say likely will need to retest 5300 to confirm bullish. We should see an attempt to rally, and it need to overcome this because if you look at the hourly time frame, that is where the selling begin. If we do attract more supply at this level and then to start the sell off, it could break below 5200 and then going to test this next zone, 5120 to 60. If we do get a spike of the supply, then likely this zone will be violated because this is not a major zone and it should break below. If you look at the whole structure, the context, which we discussed last Tuesday, there is a exhaustion of the momentum because this is different from previous rally. And subsequently, this is the topping formation. There is increasing the supply, especially during the loss of the up momentum. That's even lower momentum. And this is a increasing of the volatility, change of character bar, breakdown with localized increase of the supply. All this painted a picture saying that the bull is almost done, but we still need to get a confirmation. The bull is exhausted at this point, but it could still drag on until we see the aggressive supply coming out. This is some telltale signs and need to be aware of that. Most importantly, look at your setup. If the setup that you are trading is still working, then stick to it. For example, crude oil is very strong. If you lean towards the oil and gas related stocks, for example, we talked about the SM Energy last week. It's still going up, but today we don't have a setup is extended. And also copper miners, FCX, SCCO, their underlying the copper, the crude oil are very strong. That's why they have a higher probability to rally up and follow through to the upside. Let's stick to what's working and also manage the trade. If you think the market could be having a pullback soon, but there are still many setups that's still valid and you would like to trade them, feel free to dip your toe in and to try smaller size or reduce your holding time frame. If you used to a few months swing trade, cut down to a few weeks or even 1 to 2 weeks or a few days. As long as you hit your profit targets, it's a R multiple of 1 or R multiple of 2, then that's good enough considering this market is very overbought. If you want to catch my latest videos, click on the subscribe button and the bell right now so that you get instant notification once I upload my latest video. If you want to check out my online courses, go to tradeprecise.com to find out how to profit consistently from any market without using complex indicator or understanding any financial statement, no matter you are trading or investing.